So whenever you pay for something out of petty cash, that gets done using a petty cash slip.
So that looks like this. It looks very similar to a memorandum where they're telling you the date, they're telling you what you're buying and how much it cost. The slip itself is just used when you're taking payment or cash from the petty cash fund or from that cash box. You do have to record that in accounting. And then you just write something on that little slip and you keep all of your slips in your petty cash box. And when you run out of money in your petty cash box, you can do all your journal entries and then you can replenish your petty cash fund like we just did on the last slide. So when you make a payment using a petty cash slip, that also has to be journalized. And like I said, you're going to keep multiple slips in there and just wait until your petty cash fund is depleted until you record them. So in this transaction, it says August 31st, paid cash to replenish the petty cash fund of $30. And they actually used two different expenses that they may have used their petty cash for throughout the month of August. So that's why they're doing it on the last day of the month, because they're looking at every single petty cash slip and merging it into one transaction. So they've got a miscellaneous expense that they used petty cash for sometime in the month and an advertising expense that they also paid for using petty cash sometime within the month. So again, we start our journal with our date. So we're going to date it August 31st. And I'm just going to read across the journal transaction and find the first account title that I come across. So the very first one is paid cash. So I'm going to go over to my cash special amount column. And when I try to figure out this amount, because I've got three different numbers, I'm looking for the total amount of cash I paid. So the total here that I paid was $30. So paying cash is a credit. So I'm going to put $30 in my credit. I'm going to keep reading in my transaction for the next account title. In this case, it's miscellaneous expense. That is a general amount column. So I'm going to start by listing miscellaneous expense. I need to find the corresponding amount to miscellaneous expense, which is listed immediately after it. So I had a credit in my cash, which means I'm going to debit my general column, and I'm only going to debit it $20. Now, some of you are like, oh my gosh, debits aren't equaling credits right now. Whoa. Don't worry, we still have another account title in our transaction, and that is advertising. So right under miscellaneous expense, we're going to list advertising expense, and the corresponding amount to advertising was $10. Again, we had a credit, so this has to become a debit of $10. So now, if I look at those two columns, if I add 20 and 10 together, my total debits are 30, and my total credits right now are also 30. So they still equal each other. Complete satisfaction, balance all of your transactions. And then you can just wrap up by putting your check number as your document number. So C12 in that document number.